Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 24th, 2009. Well, the market had the key breakdown level as we talked to our premium subscribers and to you guys about in the last previous videos, and that has come to fruition, folks. Those of you that have watched these free videos have gotten a sense about major levels you're looking on an intraday basis to see a sell-off on. Now, yesterday, my partner in the chat room, yesterday morning, said we will sell off after the Fed. Sure enough, the Fed comes out, we rally up and reverse with a vengeance. The market then closed below key levels. Those of you that are premium subscribers will know that best. What levels we needed to close below to see more downside. This market has continued to fall to the downside. You can see the chart. Look at the fall that we've had since yesterday's high. From 108, above 108 there, all the way down to 105, a little bit below 105 right now as we sit on current support. The Dow is down 57, the S&P 500 down almost 12, and the NASDAQ is down 29 points on the day. Beautiful fall. The ETFs that we've been accumulating over the last few days that are short are in the money from our last buying opportunity points. FAZ from 1990, SRS from 930, now trading well above $9.90, close to $10. And of course, let's not forget EDZ, which we picked up on the last round at $7, now trading near $7.70, almost up 10% on that, just in really an afternoon from yesterday to the lows of today. So again, looking to take maybe some small amounts off the table by the end of today if we fall a little bit more, but ultimately we'll see what we want to do, and our premium subscribers will know tonight as to where to position their money going forward on this sell-off. Now the question is going to be, folks, are you going to see a massive sell-off? And I'm going to go back to the intraday spiders chart. Are we going to see more of a sell-off? Or is this really it? Because, I mean, that's basically what we all want to know, right? Where is this market going to end? How is it going to go around? So keep your eyes peeled here based on support resistance levels. You have to know your master levels. The master level is what was broken yesterday and allowed us to figure out that the market may have some more selling in it today. Sure enough, you can see the market breaking key levels on the downside, and you can see the market coming back down. Once it broke 106, it was destined for 105. As long as it closes, if we can see some close below 105, you may see 104. That would be a major support line at 104, though. All right, now, again, look at this chart. Look at what happened yesterday. The key was the market initially misinterpreted, you could say, the Fed. Now, was it that or the fact that what the Fed said affected the dollar? Because what we saw yesterday on the FOMC policy statement is initially the dollar sold off and the markets rallied to the highs. That's what this uptrend was right here. You can see right there. But no sooner had that happened than the dollar started to strengthen and unbelievably strengthen, and the markets just got pounded. And sure enough, folks, you guys know the market is down today. What does that mean about the dollar? The dollar, in a technical sense, you should know this from the amount of time we've spent on talking about how the dollar is a perfect relation to the markets in the inverse proportionality. Sure enough, the UUP, which is the dollar index, is up 14 cents today near the highs of the day. Right there, folks, that's all you need to know. If you look at the dollar, you should know what the market is doing, and if you look at the market, you should know what the dollar is doing. Market down, dollar up, market down. Simple as that. All right? Simple as that. Now, let's go back to the spiders and look at these intraday levels. Watch this sell-off here yesterday. The sell-off was unbelievably good. Yesterday afternoon from 2:15 to 4 o'clock in an hour and 45 minutes, the market did more volume in that hour and 45 minutes than each of the previous 2 days in the market. That's amazing, folks. Volume today is very solid as well. We've done basically as much volume as we did Monday or Tuesday of this week as well, just at this point today. So you will see a decent volume day on this downside. Now, the markets are not down huge. I mean, Dow down, again, 55 points. S&P down about 11 points. That's basically 1% on the S&P, a little more than 1% here. But the key is whether or not you're going to look to where we're going to close today. Are they going to rally this market up into the close? Are we going to close at the lows, at the highs? Where are we going to go? That's going to give you a good indication of where this market is headed. All right, but remember, watch the dollar. The dollar is your friend here. It will tell you where this market's going to go. If the dollar was down on support, you'd get to look for upside in the dollar. That would mean downside in the markets. Interestingly enough, on Tuesday, folks, we hit double bottom on the dollar going back to a previous low put in about a week ago when we were the last time when we went up to the high before a small pullback. So you have to look at this stuff as being unbelievably important in regards to this market, all right? So again, Come join the Research Center. We'll fill you in all tonight about what's going on. But again, the downdraft perfectly called yesterday after the Fed by Chief Market Strategist Nick Santiago of InTheMoneyStocks.com. He said the market will sell off after the Fed. Market dumped. It looks like we're continuing to sell today, at least at this point. Now, again, what I want to say, folks, watch to see if we start to rebound late in the day. Are we going to see buy programs come in and try to prop this market up? Or are we going to continue down possibly to 104? 104 will be support if we take out this low level right here at around 104.90 to 105 level. If that gets taken out, look for that 104 level to be tagged either today or tomorrow, at which point you will have very, very good support in this market. All right, watch that very, very closely. On the upside, if you can get through this 20 moving average, which is sloping down, you may make a move all the way back to 105.50. Even possibly if you make a move through that on buy programs, you could go to the low from yesterday and this green trend line anywhere between 105.95 and 106.10. So this level right down here, this green trend line would be very, very good resistance should we make a move up in that direction. Watch this stuff closely. Now, a couple other things. I want to show you the SPY on the 60-minute chart because I think it's extremely important. What you can see here, folks, I'm going to draw these lines in. Look at this. What is this pattern? Possible M-top pattern on the intraday 60-minute with a nice move down. Now you're consolidating. Now, do we break down off bearish consolidation here, or do they buoy us back up to form the A pattern? Which way are you going to go? But right now, you can make the case for an M-top pattern in this market that has to be understood what that means, how it could play out. And again, there's a couple ways for that to play out. You're either going to see a consolidation here and a breakdown further to continue the M pattern, or you're going to look for the A pattern to form, which ultimately will lead to a move up and then a move down, all right? You have to understand these patterns. Come join the webinar. We have a webinar a week from this Saturday is the next webinar. Watch that one closely. We're going to be in-depth on a lot of key stuff. Nick will divulge how he talked about, how he called the market, the Fed sell-off after the Fed yesterday. He'll talk about a lot of other things about pattern recognition, price time pattern, a lot of our keys that we really delve into about how to analyze the market, find target prices, how to know what patterns are which, and all that other fun stuff. Now, a couple other things. Oil is getting hammered today, again, on the strength in the dollar. Also a demand issue. We had some existing home sales numbers come out pretty poorly today, and that did put pressure on the markets as well, along with the fact that the dollar rallied. Now, the other thing that I wanted to quickly mention here is that the Federal Reserve came out today and decided to remove a little more liquidity from the markets. Now, when they remove liquidity from the markets, that strengthens the dollar because you're taking dollars out of the system. You're pulling dollars back in, and that's ultimately why you're seeing downside here. So the Federal Reserve, again, making some comments about taking a little liquidity out or starting to do that kind of thing, and that is causing some sell-offs in this market very, very nicely. Again, watch this stuff. Now, going back to the intraday SPY on the 10-minute here, you can see the massive sell-off. You had to look at this as a big down move due for consolidation. We called for a bounce at 105. You'd have seen a little bit of a bounce here. We're still holding this 105-ish area. That is the big level. You could make a case for sideways consolidation over the course of the day. Even on the 60-minute, as I showed you, you have to be aware of those patterns. Now, lastly, but not leastly, what you need to watch in the afternoon is how this market plays out. How do we close today? Do we close strong? Do we rally back up? Do we close weak? Do we make new lows and take out the early lows? The majority of this market, except for yesterday's late day sell-off, has been making the low in the early portion of the day. So far, that has held true right here. Here's your low of the day. Yesterday, until that late day sell-off, the low of the day was made around the same time. If you go back even further, check it out. Low was made at the same time. Let's go back even further. All right? Low was made at the same time. Do you guys see the pattern here? You're constantly seeing the lows being made between 10:30 and 11 o'clock usually, anywhere between really 10 and 11, and then the market drifts up until yesterday. So you want to watch for that again today. So far, that's held true. We have not taken out those lows yet from the early morning session. If you do break that to the downside, then it could really mean a whole new ball game for this market, and you need to be aware of that. So these are tidbits that you need to remember. Again, I will cover everything and 10 million times more in the Research Center video tonight. Watch it closely, folks. There will be some secrets divulged. Also, watch the Pro Trader Watch List and Hot Charts and Alerts, which are all part of the Research Center. You can view that all at InTheMoneyStocks.com. Come join. Also, the chat room, folks, being privy to the sell-off of Nick's call yesterday after the Fed. A lot of them did play that to the downside. That's a great call by him. Fantastic profit-making adventure there. Take care. We'll talk to you tomorrow. Have a wonderful evening.